Welcome to Valkyrie Simple Finance. Understanding before investing. Credit cards are one of the most common and most misunderstood financial tools in everyday life. They look convenient, but they're designed very carefully. Credit cards feel easy. You don't see money leaving your account. You get rewards, and payments are delayed. That comfort is the point. A credit card is a short-term loan attached to your spending. Every purchase is borrowed money until it's paid back. Banks don't make money when you use credit cards perfectly. They make money when balances are carried and interest runs. Minimum payments are designed to feel manageable, but they stretch repayment over years, not months. High interest turns small purchases into long-term expenses. The problem isn't one swipe. Rewards feel like free money, but they only work if you never pay interest. Otherwise, the rewards cost far more than they return. Used correctly, credit cards can be useful. They offer protection, convenience, and flexibility, but only with discipline. Most people make the same mistakes. They spend for points. They normalize carrying balances, and they underestimate interest. Here's the rule. If you don't have the cash today, think carefully before using credit. Convenience should never cost control. Budgeting creates awareness. Emergency funds create safety. Debt management creates stability. Credit cards test all three. Credit cards aren't evil, but they're not neutral either. They reward discipline and punish drift. In the next video, we'll look at saving versus investing and why cash alone won't build long-term security.